So in this video, I'm going to show you about the Fibonacci and combining with support and resistance gain and loss level and how you can use it in your advantage to get better setup. So let's be quick because I don't want to make a very long video. I could also take off my grid here. So if you went on my first video, the first video since I reposted on YouTube, because the other videos of before when I hide the channel got all private and I'm still lazy to put it back on public. So the first video that you will see on this channel is about the levels. I strongly invite you to watch it. And the last video that is before this video I posted is about the Fibonacci and knowing when to trace it in the good moment, because many people just trace Fibonacci everywhere. It's not really the case, you know. It's been now 11 years I'm trading. I've been trying and tracing my Fibonacci retracement tool everywhere. And now I notice that actually you need to take, I noticed a long time ago that you need to take proper swings according to how trend is working. So I want you to look at this previous video, but basically we want to look at, for example, here we are on GU on a 1 hour time frame. We have a trend going down, so we create lower highs and lower lows. And we want to see the latest low for a bullish situation, the latest low that broke another low and where got a continuation, a swing that broke a high. So here we have the high, we have the low. The low broke this low, so we are good to go, and it broke this high. So there is a swing going up potentially to create a new trend up. Okay, so now what we need to wait, so we have the first point, is to see where do we trace the second point. You could think here, for example, and you will be correct in the sense that we potentially have a retracement that goes to 618, potentially. But what's the most important, actually, and to make it really accurate in your tracement of Fibonacci, is to wait once this swing up is initiated to have a break of another low that has been created in this swing. Okay, I want you to really remember this because it's very important, and vice versa if you are in a bearish situation. So here we created some lows, as you can see, and this little swing that you have here did break a low that was here. So now we can think that we could trace from this swing, so that was initiated, to here. Here we got consolidation, so this week I don't really take it as a high, but we could, okay, on this situation. We have, after a pullback to the golden zone area, it's been consolidated, but overall it went where we wanted to break the high to get a temporary trend up, okay? So here, how you could make even more confluences for your pullback and be more confident, I will say, to take this long. First, you will need to document the strategy, create data, and make really like an extended work on documentation and backtest. This is very important. That's why you can't not take just my video as a confluence and think, oh yeah, okay, he showed me this and then I can just start trading. This is not how this works, but you have to document to see if it works over and over again to then take the trades. But if you would like to look for another confluences for the Fibonacci, that's where we use the levels of support and resistance, gain and loss. The first video, remember, you need to watch this. But in this situation, we would like to see a level that could potentially tells us that we can have a good support for us to take this pullback. And here, clearly, we can see that if we unzoom a little, that we have a level that has been created here and here that was a resistance that got broken, and we confirmed it as a support, okay? Here we tried it again as a support. We broke it, but right away, within even a day, we actually rejected it. So this level is valid. And if you look at it and you are a bit used to price action, I think if you go on the 4 hour, we can relate it to a level that is, yeah, here. So the level is when, for example, on the bullish situation, when you look for a support, is when you had a bullish candle that closed the body and a bearish candle created where the body opened exactly at the same place. This creates a resistance, and sometimes the wick of the reversal, so it means 2 to 3 candles, for example, reverse it, would confirm that we gained the level. Here we didn't have the confirmed of the resistance, but we broke right away this area for make it a level that is a support to be gained, okay, or to be prove. Here after we had this wick that confirmed that the level of support was gained. So then we did this swing and we went here, and you can see I said 2 to 3 candles, and in 3 candles we broke it, reversed it, so we confirmed the support. And guess what? The funny thing is that when you took this pullback, you see that we had a deeper retracement to the 382 because it went to the level of support that was needed to be confirmed again. Okay, here we have another level that you can see here, and it was also confirmed as a gain support. So here you have 2 supports backing you up, so your stop loss at 0 is very easy to have and also gives you more confidence. That's pretty much it as the confluences of level of gain and loss. I want you to take this short video as an example. I wanted to show you a clear example. Now it's your job to go on historical charts, look for the sell-ups, so for the tracement of Fibonacci that you are interested with, if it combines with a level or not. According to my documentation, if you add up a level that is to be gained or confirmed, but at least that you have a support level in those areas that are close to the golden zone, okay, or a bit below, a bit above, it's okay, will give you much more high rate of success than not having any. If you don't have any, it might be because you traced your Fibonacci tool the wrong way. And that's where you maybe need to look at the previous video to learn how to trace better, to understand trend, because it's very crucial to learn how to trace your Fibonacci correctly in order to understand what's real trend. Many people use zigzag, but the problem is that you don't understand what's a low and what's a high in the real trend sense. So that's where Fibonacci is so complementary. It's actually part of those trends, so you really need to take this in consideration. I hope this video helped, and I wish you a good day.